morning, Mike DeCepoli, Heritage Financial Advisory. Welcome to Heritage Insider Weekly for Saturday, August 17th, 2024. Hope you all had a great week. Coming to you on a Saturday this week. Had some travel yesterday that made it impossible to get the video out, so we didn't want to miss the opportunity to come back and update on the markets and some economic data that we got this week for the economy, especially after the big scare that was 2 Mondays ago. With the steep drop on August 5th over what we had said at the time, which was much overblown fears about Japan's economy. So let's take a look at where we landed 10 market days later. You can see the headline speaks for itself. Stocks closed higher Friday as market comeback lifts S&P to the best week of 2024. So I think this speaks to the broader point of volatility is generally surrounded by some of the best performance and the best rallies back, if you will, or recoveries in the market. And that's why it's so important to have a strategy to approach these things and not overreact emotionally when they happen. So had a lot of catalysts this week, one being namely the inflation reports, the producer price index on Tuesday and consumer price index on Wednesday. Both reports coming in well. This headline here about the consumer price index shows inflationary rate slowing to 2.9% in July, which is the lowest rate since 2021. So continued progress on the inflation front, which sets the stage for the much anticipated Fed interest rate cut in September. We also had some jobless claims reports on Thursday, which were also supportive of the narrative that the labor market, while weakening slightly, is firm enough for the Fed to continue to act. And the data is not suggesting that growth is falling too quickly, which would be signs of a forthcoming recession. So let's take a look at the market and let's see how we did with buying the dip. Right, like we had said last week, everybody wants to buy the dip, but it's very difficult to do so because nobody wants to buy it when it actually happens. Some of the best investments made in markets will be during heightened volatility and heightened fear. So this just speaks, in our view, to the importance of, trying to gain an edge on the markets and understand what's going on, what to look for, what indicators could be key in finding that reversal, but also the psychological game where if you come into something with a plan, it's much easier to stomach. So, when everybody was flying high over at this point here, and we kept looking for that buy the dip opportunity that seemed like it was never going to happen, we talked about how this part, if it happened, would be very noisy. And that's exactly what it was. It was very noisy. And there's a lot of folks that will, inevitably have gotten burned through this, just like they have in past corrections. They'll have, unfortunately, price sold it at the low on Mondays when perceivably it seemed like the world was ending. So we have some really good strength coming out of this, great reaction at the levels that we had planned ahead of time. And what's even more important is looking underneath the market at the strength, the relative strength index. We have a really nice move higher here out of this. And I think, by no means where we are right here is overbought. So markets should expect to consolidate gains a little bit. V-shaped rallies are nice, but they tend to need to back check themselves a little bit. And so we'll see what happens there, but we're not overbought by any means. And coming out of this correction, we talked about, right, when general market events happen, fearful ones, that initially take everybody down, right? There's a sell first, ask questions later mentality. Initially, all stocks get hit, but it's the previous leaders and the stocks that are the best of breed that will recover the quickest, right? And that's why in a correction, as long as you don't think the stocks are overvalued going into it, the stocks you want to buy coming out of it or buy the dip, if you will be market leaders. So just to name and highlight a couple market leaders here. If you look at Apple, and excuse all the lines here, I'll clean a couple of these up for a moment. But what you have here is really a scenario where Apple gapped down on August 5th and has not looked back since. 10 straight days higher. You can see a major shift in the volume profiles down here. A lot of people all of a sudden buying Apple. So these are the type of opportunities where you didn't have to nail the exact bottom, but you could have bought it anywhere in this area here over a course of a couple days if you felt the coast was clear, and it would have been a good opportunity to buy the dip. Nvidia is another one like that where, again, it goes through these long, sideways, protracted corrections that usually end with some sort of a violent, seemingly sell event, and then finds its footing and moves higher, and Nvidia is back to being a market leader once again. So there's a lot of other examples like that. And what's also important to note is that other major market barometers like the dollar, which we want to see the dollar be sideways to lower, that's a very good tailwind for the stock market. So we're seeing that the lower high play out on a multi-month view of that. And also the VIX. Excuse me, we talked a lot about the VIX when we came in Monday and did that update on August 5th, and how the fear gauge of the market, which is the VIX, tends to tell you where major inflection points are. So naturally, when the VIX gets exceptionally high, that's telling us that there's a lot of fear that's been priced into the market, right? So unless whatever's feared already is going to end up being worse as the outcome, the likelihood is the market has over-factored in these events, and that's why these tend to mark turning points. And we said that day that the fear levels in the market on Monday, August 5th, were that equivalent of March of 2020, when we had a global pandemic and governments around the world shutting down businesses in the private sector. So much different scenario, but nonetheless, you look at how these things resolve themselves, and the VIX has come right back down to where it was on July 31st in the course of a couple days, really 2 weeks actually, like this event never happened. So volatility is not a malfunction in the market, it's a side effect. It's not a side effect, it's a feature of the market. And sometimes, volatility comes around to shake the tree. But they don't shake the tree unless there's something really good at the top. And I think ultimately, like we said, market rallies, right? Bull markets, they have violent shakeouts along the way. It's not supposed to be easy. It never was. But when we look at the market on a longer view here, the market is coming out of a 2.5 year bear market, and really just getting going as far as making new highs. So I think the previous highs of 2.5 months ago or so will eventually be challenged and taken out. We shouldn't expect to go there in a straight line. Markets do need to digest things accordingly. But ultimately, when you look at who's leading us out of this, it's exactly what you'd want to see. It's big tech leads the market out of the drawdown. So this is why our focus has been more in the technology and innovation side of things. We think that we're in an exciting time here of the next industrial revolution, which is in tech, and it's not the ninth inning in our view. We still have a ways to go, and while there will be corrections along the way, these are the companies we want to focus on. Also, this is the visual representation of that. You can look at how the gains were spread out through the market just over the last week, and the leadership out of this correction is what you want to see. It's big cap tech and it's semiconductors. I mean, you look at some of the returns this week in the semiconductor, which is your chip stocks, probably the most important sector for AI, and you have a lot of these things doing double-digit returns in a 5-day period. So it speaks to the nature of how oversold markets were, and it also shows you how good these companies are and the appetite for them. And last and not least, just checking in on investor sentiment. Couldn't ask for a better setup here. Most investors still not buying this rally, not believing in it, fearful of it. So what we'll say, they'll chase it many percentage points higher because they're going to operate strictly on an emotional feeling or instinct, if you will, which generally hasn't served many investors very well at all, ever. So that's what we have for this week, but feel good about where the market is. We feel good about how it's taken shape. Opportunities that will continue to present themselves, we'll be ready to take advantage of them. But as far as some of the buys that we got last week, so far looking great. And just to give you potentially an expectation of what we could have here, you could get maybe a back check down to the channel here before we go higher. So look for a little head fakes along the way, but keep your eye on the prize. We'll be there with you every step of the way. If you have any questions, reach out to us. Hope you enjoy your weekend, and we'll see you back next week for Heritage Insider Weekly.